Welcome to our comprehensive guide on development financing overview. How to get development financing if you're an experienced builder or developer looking to bring your construction plans to life. This article is for you. In this guide, we'll walk you through the development financing process, from filling out applications to project monitoring. We'll explore how development financing works, who benefits from it, and the essential documents needed for the application. Additionally, we'll weigh the pros and cons of development financing, helping you make informed decisions about your funding options. Moreover, we'll delve into the role of project financing and the risks associated with development financing. Finally, we'll discuss why companies, especially those with weak financial backgrounds, choose development financing to fund significant projects. By the end of this article, you'll have a clear understanding of development financing and how it can help you fund your large, long-term projects with confidence. So join us as we unravel the intricacies of development financing and empower you to embark on your next construction endeavor with ease. And if you find this information valuable, don't forget to subscribe to our channel for more insightful content on finance, investment, and real estate. Let's embark on this journey to financial success together. Development financing overview. How to get development financing. Development financing is like a special loan given to experienced builders and developers to help them get the money they need for building or fixing up homes, stores, or a mix of both. The lenders who provide this type of loan look at how much the property will be worth in the future before deciding on the loan amount. This helps builders and developers bring their construction plans to life. Development financing is often granted to experienced builders and developers so that they can raise the capital to turn their building ideas into a commercial reality. Specialist development finance lenders will take the future value of the property into consideration when agreeing a loan. While a regular mortgage lender looks at the property's current value, a development financing lender considers the value of the property once it's fully built or renovated. Development financing process. Here's how the development financing process goes. You fill out an application, providing details like the site or property cost, development or refurbishment expenses, professional fees, and the time it will take to build. The lender offers terms based on the information and evidence you provide. They conduct credit searches on your current finances, experiences, and the development location. If the loan is approved, your project will then be monitored regularly by the lender. How development financing works. Development financing is often used by builders and developers planning extensive projects and ground-up developments. For example, if approved, development financing could be used to cover both land purchase and building costs. A lender might finance 50% of a property purchase and 70% of the build, meaning the developer would fund a much smaller amount up front, which frees up cash for unexpected expenses or other projects. Who benefits from development financing? Builders and developers commonly utilize development financing for large-scale projects and new constructions. If approved, this type of financing can cover both the land purchase and building costs. A lender might fund 50% of the property purchase and 70% of the construction, allowing the developer to contribute a smaller upfront amount. This frees up cash for unforeseen expenses or other projects. What documents do I need for development financing? Because development financing involves considering the future value and marketability of the completed project, there is a significant amount of paperwork required for the application. The lender needs to assess the short-term loan repayment and the overall success of the project. The required documents include 1. Current property value, if owned, or purchase price. 2. Predicted end value of the project. 3. Build or renovation costs. 4. Development timeline. Your experience resume CV. 6. Information about the professionals working on your project. 7. Copy of planning permission. 8. Building regulations compliance. 9. Details of any Section 106 agreements or planning restrictions if applicable. Pros and cons of development financing. Advantages of development financing. 1. Enables you to secure capital. 2. Offers rapid access to funds potentially within 48 hours. 3. Short-term loan commitment, preventing long-term financial obligations. Or can cover expenses related to contractors and materials. Disadvantages of development financing. 1. You will need to submit thorough documentation. 2. Fixed costs like arrangement and exit fees are part of the deal and may be higher compared to a commercial mortgage. 3. Negotiations between you and the lender will determine the interest rate. What is the role of project financing? Development financing helps companies get money for growth opportunities, especially for large, long-term projects. It relies on the cash flows generated by the project to pay back sponsors or investors. Risks in development financing. Development financing comes with risks like changes in supply or demand, financial fluctuations, and operational issues. These risks can impact the success of the development. Why companies use development financing? Companies, especially those with weak financial backgrounds, use development financing to fund big projects. It's a way to secure funding without putting too much strain on their own finances. Development financing, in summary, development financing is a way for companies to fund large, long-term projects using a specific financial structure. It relies on the cash flow generated by the development to pay back the money used to build it. This approach is less risky for companies, making it a popular choice for funding significant projects. Contact us today for more information.